And we propose to service this debt with a budget that's in deficit this year, probably $4 trillion. There's a little poem that I'd like your listeners to remember. When your outgo exceeds your income, your upkeep becomes your downfall. And people need to understand that servicing $150 trillion in debt, where your aggregate household income is more than $4 trillion a year, is a challenge. And so people look at this and they become concerned about the efficacy of their savings too. But it gets worse. The worst is negative real interest rates. Negative real interest rates are not a force of nature. If they were, Dunnigan, you would happily save, forego consumption, and lend money to me, and pay me to consume now and take on the credit risk. This is totally insane. But the arithmetic around the world's primary savings and investment instrument, which is the U.S. 10-year Treasury, documents this. The U.S. government will borrow your money for 10 years, and they will pay you 1.5%, 150 basis points, in a currency that they, not some fat old bald libertarian crank named Rick Rule, they, the Congressional Budget Office, suggests is depreciating by 6.5% a year. So the U.S. government, for the first time in my life, is making a promise which they absolutely will keep. If you give them money today, they will give you back much less in 10 years. Jim Grant calls this return-free risk. Think about the arithmetic of getting paid 1.5% a year and losing 6.5% a year in purchasing power. Think about a 5% negative internal rate of return for 10 years and what that does to your savings. This is why people will become increasingly concerned about the efficacy of conventional savings products, and some will go to gold. Importantly, Dunnigan, the fourth point is that not very much has to go to gold. You hear about the silver squeeze, the gold squeeze. The one that's coming up, I think, will take people's heads off. And here's why. Precious metals and precious metals-related assets comprise less than 0.5% of the total value of savings and investment assets in the United States. 0.5%. The 3-decade mean in the United States is 1.5%. So if quantitative easing, debt and deficits, and negative real interest rates cause investor behavior not to accelerate, but merely to return to mean, 3-decade mean, demand for precious metals and precious metals-related securities triples in the largest savings and investment market in the world. That's what I think is going to happen. Recent estimates suggest that the retail silver squeeze, the sort of Reddit squeeze, tightened up supplies in the United States overall by 2.5 or 3%. It was a lot of money because the supplies are large. But when you really want to see a silver squeeze, when demand for physical precious metals and precious metals-related securities triples, in other words, when they revert to mean, that's when you'll see the silver squeeze. That's when you'll see the gold squeeze. Investors and people who are buying precious metals to protect themselves probably want to lean towards gold because traditionally that has been the conservative asset class for asset protection. Speculators, I think, need to look to silver, Dunnigan. I'm not saying that people should speculate or invest, but what happens traditionally is that in the second half of a gold bull market, when market leadership is established by gold and momentum is established by gold, silver begins to outperform gold and outperform substantially. So investors should look to gold, speculators should look to silver, and aggressive speculators probably should look to silver equities. Traditionally, the highest risk, highest return, most volatile asset class in the whole precious metal space are silver equities, simply because the combined market capitalization of all the silver equities in the world, or at least all the high-quality ones, is so small that when the generalist investor adopts the narrative and tries to crowd his or her money in that space, there just isn't enough capacity in the space. I think that precious metals are less challenging psychologically than uranium was. When people look at precious metals and they get bored by it, people looked at uranium and they hated it. I would talk about uranium from the podium, and people would come up to me after a public speaking engagement and tell me I was a despicable human being, that I was speculating on Hiroshima, Nagasaki, Fukushima, and 3 Mile Island. At least in the gold and silver business, I draw yawns as opposed to hostility. I I think one thing that happens to people around the precious metal sector is when they buy into the narrative, they overbuy, which is to say a little bit goes a long way in precious metals. Precious metals can go very long periods of time, 6 or 7 years, and make you no money. But when they do make you money, they make you gobs of money, and they make you that money quickly. So you need to be in place at the beginning of a market, and you need to have a fairly broad range of tolerance for time. You and I have talked for years about the Barron's Gold Mining Index, which I will send to those listeners of yours who are interested. And looking at that index is really instructive. The average precious metals bull market is not like some people think, 2 or 3 years. The average is 10 or 11 years. And those bull markets are punctuated by fairly long and fairly deep market declines, which is to say cyclical declines in secular bull markets. In 1975, as an example, there was a 50% decline that lasted 14 months. People who got shaken out missed a move at the end of that market from $100 an ounce to $850 an ounce. And they missed a move in the equity indexes that was almost double that. So I think it's important that people understand that these markets take time, and that these markets, the volatility in these markets, will test you. I think, too, that people need to examine their premise around precious metals. I believe that a move higher in precious metals is absolutely inevitable. And I believe that to be true for 4 reasons, which I'd like to give your listeners. Precious metals move higher when people are concerned about the maintenance of their purchasing power, their standard of living, in conventional savings instruments. And I'm going to use the U.S. 10-year Treasury, the largest and most liquid security in the world, to represent the range of savings and investment alternatives around Americans. So let's talk about the reasons why I believe that gold and silver has to go up. Is this fear justified? The first fear, which you and I have talked about before, Dunnigan, is quantitative easing. If you did it, if you printed something called a Dunnigan, you would be accused of counterfeiting and you would be thrown in jail. When Congress does it, it's policy, and they become highly popular, and it gets them reelected. But however you view quantitative easing, what it is the creation of new specious currency units that are introduced to float the economy rather than to accommodate the economy. Some observers suggest that the float of U.S. dollars has increased by 40% over 2 years, which is to say 40% of all the dollars in circulation have come into existence in the last 2 years. So clearly, government-sponsored counterfeiting is taking place on a very, very, very broad scale. And if nothing else gives you pause about the efficacy of the currency, the fact that they're printing lots and lots and lots of it for free means that you need to be concerned. Will it catch up with the dollar? Almost certainly. If you create new ones, if you create new supply without creating economic value, certainly you depreciate the value of existing ones. But the story gets worse, Dunnigan. Beyond quantitative easing, there's, of course, debt and deficits, which you and I have talked about in the past, too. Collectively in the United States, we owe each other $29 trillion on balance sheet. Now, net of the Fed's own balance sheet, that's only $22 trillion. But that's on balance sheet. We also have off-balance sheet liabilities, Social Security, Medicare, all those things. I'm not going to get into a policy discussion. All I want to say is that the off-balance sheet liabilities, net present value, are $120 trillion plus.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.